Is private equity, so to speak, going to actually deploy some of the capital that it's been sitting on for a long period of time? Will that become more active? I know it did last year, but year over year, the comparisons still are pretty minor in terms of the growth, in terms of what we're seeing deal-wise.
Yeah, on the sponsor side, I'd say two things. There's $4 trillion of dry powder is the number. It used to be almost 5, so It is smaller because the fundraising environment has been tougher. But you saw them continue to act last year, to be honest. I mean, they were a growing part of the market last year. There were globally almost 100 take-privates of public companies that were bought by private equity. So they've been deploying their money in that regard pretty consistently over the last couple of years as they seek out valuation disconnects with the public market of some of these smaller public companies. They're going to continue on corporate carve-outs. We will continue to see bigger companies shedding non-core businesses, and the private equity teams will be there to buy them, and we think an uptick in that activity. And then ultimately, what you haven't seen very much of is one sponsor buying a company from another sponsor. Right. And we are seeing that market start to come back. Absolutely. And we do see that as 55% of portfolio companies are north of 5 years.
Yeah, they got to start moving on this stuff,
years.
Right? I mean,
so there's
start
a time
returning some of that capital. Yeah,
that's where the fundraising environment's been tougher. That will only improve once they monetize. So there's an element of time in this.
Can you get a cross-border deal done in this kind of geopolitical environment?
Particularly with Europe?
Yes. I'd say, cross-border, again, the geopolitical environment, there was up, cross-border, cross-region was up 40% last year, so it was with the market. A lot of, I think the U.S. was definitely the biggest target nation by a mile, maybe 3x the next country. So you've got very big interest in investing in the U.S., as global supply chains, as the tariffs have, put a little urgency on having assets in the U.S. So yes, you can absolutely get a deal done across. The geopolitical environment is tense, but frankly, it's been that way all. It's been that way all through the course of 25 as well, and it continued to have a strong year in cross-border.
So no real concerns about a deal that might require EU approval, and given the recent upswing intentions?
In the moment, it feels that way. But if you just step back and look at the activity that's happened, and I go back to company strategies. Companies have defined strategies they're going to act on. Will the governments play a role? It's possible. But I think the defined strategies of growing the corporate footprint globally is what has won the day to date. So I'm going to continue to bet on history on this.
All right. Tom, appreciate you taking time. Thank you.
Thanks for having me.
Tom Miles, Global Co-Head of M&A at Morgan Stanley.